Our mission at SD Bullion is clear: the lowest cost gold and silver available online. While we do not have pretty blue boxes, free shipping, 4% credit card fees, or glamorous gold and silver infomercials, SD Bullion has the lowest prices that may save you hundreds on your next order. So before you make your next investment, do the math and join the over 15,000 new customers who have recently made the switch to SD Bullion. Why pay more?
This is the Doc and Eric Dubin with the SD Weekly Metals and Markets Wrap. Joining us this week is a special guest, a good friend and the Admiral of the silver market himself, Eric Sprott of Sprott Asset Management and Sprott Money. Eric, it's great to have you back on the show.
Hey, Doc and Eric. Happy to be here. I always enjoy your interviews every week, so happy to participate.
All right, well, we have perfect timing getting you back on the show here, Eric. On Thursday this week, we had chaos in the silver market with the LBMA silver price, technically really the new silver fix, coming in almost $1 below what the prevailing spot price had been. The silver price was announced at early in the morning on Thursday, and just after that, basically, the futures market saw a massive sell of 5,000 futures contracts within about 60 seconds, and there was a flash crash, and there was quite a bit of chaos in the silver market. And what's interesting is, I mean, all of our listeners and everybody listening to the show, and both of you guys, Eric, we're all fully aware of the silver manipulation, but it was almost so blatant this time that, I mean, we're getting emails from people who would not normally have any interest in talking about silver manipulation saying, what the heck is going on? It was so bad. So what's your take here, Eric?
Well, you know, it sort of reeks of desperation, right? Obviously, the physical markets are a lot tighter than what the paper prices show. And of course, you see what's gone on here in all these markets. It's a process where, you know, they write all these options, and as options expire, they got to force the price to a price where the writer of the option, which typically are the commercial banks, end up taking advantage of the customers. And that looks like exactly what happened yesterday. The fix is the fix, and I think it came in at 13.58. So if you had some option expiring, guys, well, your option expired worthless. We owe you nothing, even though the price was 70 or 80 cents higher. But it just reeks of, you know, these 6 participants were in a situation where they probably had a lot of money on the table where they would have been losing, and they just weren't going to deal with it. They just said, fine, we're making this the quote. And of course, something's going to come out of this because, as you may recall, I think there was a Deutsche Bank trader who was messing with the gold price, and ultimately the customer in that case went to, I guess it was the LBMA or the FSA in England, and the guy was sort of convicted of manipulating the markets. And I can't imagine somebody who's sitting there watching the 14.40 price, and then next thing you know, the broker says, no, the fix was 13.58. We don't owe you any money. I mean, somebody's going to react to it. But I think it's the blatancy of it. It's the sheer brazenness to think that you can just put out whatever price you want, which is typical of banks. I mean, they think they're above the law, and quite frankly, they've been above the law, right? They'll pay their fines, but nobody ever goes to jail. So it's just another example of this continuing interference in the paper markets by the major commercial banks.
Silver is so often used as a tool to manipulate the precious metals complex as well, too. We've been seeing that periodically. There's some very clear examples over the course of January in particular. And it just looks, like you said, it's an act of desperation on their part. They're trying to keep the precious metals complex down. And yesterday, you know, the options were definitely part of the mix, but it's also that same old theme probably. It's really hard, you know, to say anything definitively, but the pattern historically has been with us for years that they use silver as a tool to help keep a lid on gold. Do you think that that's a frequent thing that we see?
Yeah, I agree with you totally, Eric. I mean, the silver is an easier market to move around, right? Because it's just a very, very small market in terms of dollars. And I think that they use the silver market to try to keep gold under control. They normally would crack it first before they crack gold. And so I couldn't agree more. As you know, most things are manipulated these days. And I think they use silver to keep gold under control. And my own thesis is that they're not going to keep gold under control here. In fact, I'll go to it now. There's been some spectacular data for the month of December where I think India imported something like 109 tons, and the exports from Hong Kong into China, I think, were 111 tons. The exports from Switzerland to China in the month of December were 59 tons, with the Russian bank by 20 tons. Even the additions to the ETF funds has been 50 tons. You add it all up, you got 372 tons of demand from 6 sources, and the world, ex-China, mines 210 tons a month. So I'm not surprised that we're seeing these manifestations of shortage showing up here, because the demand is way off the charts here. And of course, you can imagine it continuing with most countries blatantly saying they're trying to devalue their currency. Well, what are the people in the country supposed to do about that? The Chinese are all trying to buy U.S. dollars. Well, and now it looks like the PBOC is trying to restrict the U.S. dollar purchases. Well, what's the next thing you're going to buy? You're going to buy gold. And I think we are seeing very, very good demand for gold out of China, and I expect it will continue. And it will continue even more so with this threat, of the Chinese devaluation being brought more into line with what's going on in Japan here. I mean, it's ridiculous that they've gone to negative interest rates simply to weaken their currency. And of course, the losers, China, the U.S., Germany. So the currency wars continue.
It surprises me that the dollar actually has not risen as much as it was earlier, 2015 in particular, given all of the turmoil that's going on. And I think that actually speaks to just declining purchasing power and this round-robin rotation that the central bankers have been doing in terms of this, currency war execution, trying to get declining currencies falling at roughly relatively the same sort of rate for the big crosses, Japanese yen and euro and the dollar have basically been taking rotation turns for devaluation, with the dollar being the first because our QE program was earlier. And now we're looking at China actually trying to introduce far more opacity to the Shanghai Gold Exchange's offtake numbers. I'm sure you saw that story. It's linked to how they're trying to deal with currency flows and capital flight in China, and just trying to conceal what they're doing with the gold market as well. A lot of people in the precious metal space have kind of had an affinity for China because they're basically buying a lot, and they're helping to support the market. But nation states have interests. They're not cozy friends, and I often wonder, what is going on in China, and I'd love to have your take as far as where you see their economy and what they're doing with their gold declarations being so significantly understated, and all of these things that they're positioning. And what's your take as far as where China is today?
Yeah, well, Eric, I agree with you completely. I mean, there's been this big debate between GFMS, who does the work for the Gold Council, and Koos Jansen, who does his own independent work for Bullion Star.
Right.
Where Koos would suggest the demand is 2,500 tons a year, and I think the World Gold Council has it 1,000 tons a year. Well, you know what? 1,500 tons a year is one heck of a difference in a total market of 4,000 tons. And I would say that I certainly side with Koos Jansen. And even the data this last month reported when China imported a total of 170 tons, 170, and they produced 40 tons themselves. Well, there's 210 tons. Let's annualize it, That gets you well up into the 2,500 ton range that Koos has been pointing to. So I think the Chinese almost are the market for gold, of course, including, you can't forget India. And, India's got all these programs where they try to restrict imports, but it looks like they're not working, and the demand out of India was very strong in December, and I suspect it's going to continue to be strong as all these countries' currencies come under pressure. I mean, it seems like a no-brainer to me. It probably seems like a no-brainer to you, but, we still haven't busted that the paper control yet, but I think we can't be too far away.
About 2 weeks ago, I think, maybe a week ago, memory fails, but Zero Hedge ran an interesting story about various prices for consumer products in Canada, $15 box of cornflakes, et cetera, et cetera. Are you seeing a lot of clients coming to you and saying, hey, you know what, we're recognizing purchasing power destruction and resulting inflation, and I want more gold? Are you hearing those messages more from Canadian citizens and your clients and customers?
Eric, I don't really think so. I mean, it's funny that you could have what's going on, and from the depreciation point of view, what's going on in Russia and Argentina and Venezuela and Canada and Australia, and it's been a very slow move to protect oneself, right? Because, of course, we're always bombarded with, everything's wonderful, the economy's growing, the Canadian dollar weakness will be temporary. But the fact is that I think the world's heading into a recession here. Certain currencies will all be weak relative to precious metals. I mean, the big thing to me is ultimately my primary concern has always been the banking system. And if you get the value of paper assets going down for a bank, the liabilities always stay the same, right? Their deposits are bonds. They don't go down with the value of assets. And as these assets go down in value, of course, your equity gets wiped out. And just as we all know, any thinking person knows that we're all basically wiped out in '08. Here we are, 7, 8 years later, and the situation's even worse. So it's funny that the general public hasn't picked up on it much, but I would say the data out of China in December and then India in December suggests that there is some movement. And of course, that's where you expect the first movement because there's that affinity to gold. Yeah. But it's been talked about much more. Even some of the major banks are coming around and sort of saying, well, maybe gold has a role here, like they're changing their tune. So, and they probably realize exactly how tight it is. I mean, I just hope that those 2 tons in the COMEX disappear, and then I hope the COMEX disappears. So we'll stand by.
It'd be refreshing to have a futures market that actually discovers price. Real price. Price discovery is an endangered species.
Yeah, let's talk a little bit about the supply right now. I mean, we kind of chatted before the show. The COMEX is down to 2 tons of gold. I mean, Eric's probably got more under his mattress right now than the COMEX has left.
Eric can lend you that really nice Canadian coin that's on the Sprott wall.
Oh, that's right.
You can make a deposit to the COMEX depository.
Yeah,
not a 400-ounce bar already.
I mean, it's the same thing in silver. The demand has started off with the bang to 2016, and I really think it's a phenomenon of what we saw in Q3 of 2015. Eric, I don't know if you heard that show or not. We talked with Tom Power, the CEO of Sunshine Minting, who supplies the blanks for the U.S. Mint, and I think they're the secondary supplier for the blanks for the Royal Canadian Mint. And he basically said the U.S. Mint had, I think it was about 2 to 4 million coins stockpiled up that they thought they had plenty of supplies, and they were sold out within a couple of hours back in, June or July of last year. And really the entire wholesale market was wiped out within a couple of days. And so I think what we're seeing right now to start 2016 is there's been a new appreciation for physical metal rather than, at least in the investment side, the retail market, rather than having just enough coins on hand to meet the week. Both on the retail side as well as especially on the wholesale side, everyone is realizing the appreciation of having ample inventory. In Silver Eagles, coins are in allocation. They've sold about 6 million Silver Eagles in January, and that was only because the U.S. Mint's allocating. I talked to A-Mark and some of the larger APs, and they expect that allocations are going to continue indefinitely. A lot of the APs have already sold about a month's out to worth of their expected allocations. What's your take on it, Eric?
Well, I mean, I couldn't agree more. I mean, you look at the burst in sales, both in gold and silver so far this month by the U.S. Mint. They're very, very, very strong. I mean, we would probably get a record month this month if they could produce enough. I mean, we're already at pushing 6 million, and we don't even have this week's total if they have any for sale. But I mean, one could easily manage to get to 7. I think that might be the all-time. But one of the things I find very interesting every time I look at the mint data, and by the way, Steve San Angelo does some great work on this, right? He showed that, I think, whatever, 15 years ago, the total mint sales of silver were like 4 million ounces, and now they're 48 million ounces. I mean, it's just amazing the take-up of coins by the public. But one of the facts I find most interesting about the mint is I look at the relative number of silver ounces sold versus gold ounces. And it ranges from, 60, 70 to 1. Like, even this month, if we have 6 million ounces of silver and 100,000 ounces of gold, that's a 60 to 1 ratio. Well, we all know it's produced at a ratio of about 11 to 1. How is it that there could be that much more demand for physical silver coins than gold coins, and how can it be so disproportionate to what's available? And of course, as you know, most of silver is not available for investment anyway, whereas most gold is available. So, I mean, the data out of the mint keeps supporting the notion that someday it's just going to fall apart here, where all the silver's gone, and we can have this big reset and just a quick move up in the prices of both silver and gold. I mean, it just smells more and more like that every day, particularly with the nonsense of the currency wars and the lack of growth and the economic data that sucks. And we're all sort of convinced that there's some kind of GDP growth, which I highly doubt. And,
well, even the numbers for the fourth quarter were pretty stinky. I mean, by government number assessment, the government numbers, even today, with manufacturing rolling over, clearly show that the United States is already in a recession, and it just hasn't been formally declared.
Undoubtedly. I mean, when they said consumer spending was up 2.2%, even though retail sales were down 0.1% in the month of December, right? And I just can hardly believe it. But, I've always thought that the biggest problem with the United States is 3 problems: healthcare, healthcare, and healthcare. Those are the 3 biggest problems.
And Obamacare will fix everything, of course.
Because everyone's costs are exploding, and their wages aren't exploding. And even though you're saving money from gasoline, I mean, healthcare premiums are ridiculous down there. And the cost, imagine if you actually had to go to the hospital and the bill you're going to be stuck with.
The employer mandate is going to change in 2017 after our presidential election, and there are going to be probably 10 to 20 million people who are going to lose coverage because their employers are going to dump coverage. I mean, and dump human beings, literally. I mean, we've seen a gigantic shift to, the 30 hours or less employer job growth in the United States because of Obamacare. It's hollowed out the economy, and, it's kind of like analogous to how financialization and excessive leverage ends up creating gigantic malinvestment, which in turn screws up the economy. And,
and to your point, Eric, when you have these 30-hour jobs, the 30-hour week jobs, they still count as a job, right? and I think that really helped the job numbers this last year. The fact that everyone, they have a 40-hour job and they end up in a 25-hour job, and then they got to go get a second job. And we're all kidding ourselves when we see these job numbers. That's why the personal income is flatlined, because we're not really creating net new dollar jobs.
I mean, we're talking about tens of millions of people who have been dumped into part-time job employment and then multiple job counting because they're taking 2 jobs at McDonald's or whatever. And then, our statistics that our fine government puts out paints a picture that's completely divorced from reality.
What was the phrase that President Obama used? Anybody who thinks we're not having a strong recovery, what did he call it? Did he call it pure fiction or something like that?
I don't remember the phrasing, but it was darn close to him actually saying, "You guys are all just conspiracy theorists."
Yeah, and of course, every time I think of that phrase, that's pure fiction. We know what pure fiction is.
Yeah.
It's not coming together, believe me.
It's coming off your teleprompter, buddy.
Yeah, right.
What with Japan going into negative rates, the United States dollar coming under some pressure now, and clearly the Fed having done its Kabuki Theater act in December with raising rates in an effort to normalize stuff. It seems like they're having a great difficulty in juggling all of the plates, and policymakers are beginning to lose things, like that silver fix is an example. So what do you think as far as endgame scenarios are concerned? I mean, that's really hard to answer these questions and to try to, figure out what are likely higher probability scenarios going forward. But do you think that we're going to see, a financial market baseline scenario of a significant decline from today's pricing, for example, say 20%, 40%, S&P 500, kind of like what Mark Faber was talking about on CNBC the other day, and that in turn would create a lot more interest in precious metals?
Well, Eric, I've always believed that the economy isn't nearly as strong as the mainstream wants to tell us it is. I don't think that the central banks have any power whatsoever to have things happen in the economy. And I think all these things that they've done, even since NASDAQ broke back in 2000, everything they do is to try to keep it together. And I'm talking about the economy now. So, for example, you got zero interest rates, more people can buy homes, zero interest rates, more people can buy cars, student loans, food stamps, whatever. It's all meant to just try to hold it together. And that's all it's done. It's just kind of held it together. But in the meanwhile, the debt has ballooned, and the central bank balance sheets have gone crazy. And we're all going to meet that Minsky moment when we realize that, we don't have the wherewithal to pay this debt back. And the minute you start having a contraction in debt, of course, you have a contraction in consumption. Because debt's what's fueled everything. It's fueled all this consumption. If we didn't have car sales rebounding and home sales rebounding, I'd hate to tell you what GDP would have been, okay? It would have been very, very weak. And that was all promulgated by the Fed, basically bringing rates down. And they've all stayed in stasis here. It's the same thing happened in Japan. They've been doing it for 25 years now, and they're making no headway. And I would say the U.S. has done the same thing. There's no headway. And, sooner or later, if there's no headway, you start getting a reversal. We see it in many cases with all these layoffs being announced, the lousy earnings that company have. Most companies' sales are going down. I mean, how can you possibly believe in stocks when companies' sales are going down? They seem to miraculously beat the estimate. Of course, the estimate's always been revised down. I would tell you the bottom will hit its low when we stop using the phrase beating the estimate. Let's just compare what did they earn this year versus last year. Forget this beat the estimate stuff, right? You could beat the estimate forever and be losing $1 billion. And if you estimate you're going to lose $1.1 billion, you beat the estimate. It doesn't mean anything. But that's what the charade they try to pull. Oh, it's wonderful because GM's earnings only went down 22%. Of course, they don't even tell you they went down, but they beat the estimate, and it's a bit of a financial fraud that they use even that terminology. And of course, the whole thing is a financial fraud. The printing of money and zero interest rates and now negative interest rates. I mean, anybody who has thought about it, sometime when I give a speech, says, "Well, who here believes in printing money and zero interest rates?" And if you do, fine, just stay with the market. If you don't, in your heart believe it, you know what's going to happen. And now we're starting to see the early manifestations of that. I mean, let's face it. I think it'd be fair to say that the world stock markets are in a bear market. We've got non-investment grade bonds in a bear market. I mean, there's so many things that are screaming at you that, we're headed for trouble. That, yes, people will figure out, and obviously they have, that they should be in precious metals. Just the fact that we've added 50 tons into the gold ETFs this month is telling you that. So I think we're on our way here.
Yeah, the signals that the paper trader focused people in the conventional finance world are here. We're on an incremental basis, month by month, hearing more and more stories of high net worth individuals recognizing that you have to actually have control over your precious metals, and that these paper products are a fiction that can easily just disappear. Anytime there's a shift in demand, and open questions as to what's backing them.
Yeah, can you imagine if we started adding 50 tons a month to gold ETFs? That's an extra 600 tons a year in a 4,000 ton market. There's a 15% increase in demand. versus probably what was a decline last year of 5%. There's a 20% delta right there.
And the sourcing for that wouldn't be around. I mean, we've already seen the spinning plates being kept up in the air for since 2013's takedown crash with the April drive-by shooting in 2013 and the 200 plus smackdown dollar move in gold. I mean, ever since that point, we've seen huge amount of pulling out gold from GLD and other ETFs, and I mean they've basically been halved. And then who knows what the heck's going on in the central banks with their leasing and so forth. So, I mean, it's clear that there's a heck of a lot less above ground supply available for them to pull off the kind of similar shenanigans that they've done in the last couple of years. So when you marry that with all of the physical demand trends that you were talking about, it's really hard to imagine a scenario where they can keep precious metals down for much longer. And I think the kind of shocks that we saw yesterday and other things that we've seen in recent years speak to that.
Yeah, there's no doubt about it that the day. Well, of course, I think the data has always been positive. And you go back to 13. I mean, 13 was so orchestrated; it just makes me sick to even have to talk about it. But the whatever 500 or 700 tons that was taken out of the ETFs at the time, and the choking off of India. That to me was the biggest thing. Yep. They got India who was importing 100 tons a month down to 7 tons in November of that year, due to all these ridiculous rules that they had. I mean, between those two things, I mean, it freed up about 1,500 tons of supply in a 4,000 ton market. Well, now we have the opposite. India's back to about 100 tons a month. We got the ETFs adding gold. You can see that with the market going down, even the computers have probably figured out that gold's a good investment when you look at the difference in what gold's done here this year and versus the stock market. Computers are probably screaming at all those guys, this asset's going up, and some of them react to it. So I think the sentiment is changing, the physical action is changing. I mean, I love the fact that COMEX has hardly any gold, and probably the LBMA has hardly any gold, and someday we're going to break it. And may break from a physical point of view, could break from, let's say, a major Chinese devaluation, something like that, but just gets everyone to realize, my money's not safe in a currency. And that's the most important thing that most people should realize.
One of these days, you're going to get that last bar, Eric.
I hope I do.
I think you told me a couple years back that was one of your goals in life is take that last bar off the COMEX.
Absolutely. Yeah. I'd love nothing better than, for example, if we could do an issue in our physical gold trust and just go in and buy those 2 tons. That would be fun.
I wanted to pick your brain a little bit here, and I think a lot of the discussion we just talked about, it really goes well within it. I'm sure over the last couple of years, Eric, probably every time you talk to anybody, you've been asked, have we bottomed? Has gold bottomed? Has silver bottomed? Are we bottoming? Talk to the listeners a little bit about the mindset of how you evaluate and what you look for about whether the market might be in a bottoming process, basically, rather than just telling all the listeners, I think it's bottom. That really doesn't help unless outside of a short-term trade. Help teach investors what you or your team looks for to evaluate whether a market is bottoming.
Sure. Well, first of all, of course, I've had this view, and I've studied the data, and the data has always told me that there's more demand than supply. In terms of published data, yes, the central banks have probably surreptitiously sold the gold, and someday they're going to run out. Okay, so I've never had any concern that in the longer run, gold and silver were going to work out. If somebody asked me, specifically, what would you watch for to sense that things are changed, would be heightened statistics, i.e., the month of December, which is probably the biggest month I've ever been able to add up in terms of known gold demand by only going to 6 sources. I mean, I haven't even used the other 178 countries or the mints or anything like that. Okay, it could be 500 tons of gold. I just went to 6 sources there. I think the other thing is when you realize how desperate we all were. For example, I think a couple of weeks ago we had the gold price go down $2 or $3, and the mining indices went down 5 or 6%. I mean, what the hell was that? That never should have happened. And you just see these things going on in the market that are grossly inexplicable, other than someone trying to make it look like it's this. And whether it's the silver fix yesterday or the mining stocks going down 5% one day and a $5 decline in the price of gold, I mean, you can just see the extent to which people are going to try to make it feel like you shouldn't be there. And so it's that sense of desperation, the data coming back, the abnormalities in the market, whether it's the 2 tons at COMEX or the silver fix or, things that just make no sense whatsoever. And that you're getting closer to the point where most people get it. And maybe we have to have some announcement, in black and white, the COMEX has no gold. Well, hopefully they get it, but
I don't know. Some people out there, you've got to wonder.
Yeah. Well, I mean, pure logic would tell you that most of the world's population would have been way off better in gold. I mean, look at it as a Canadian, the Canadian dollar's been weak. Hey, we're making money on gold. We made money last year, we're making money this year. The Russians, the Brazilians, the Venezuelans, probably anybody in South America, Europe, because of the
even the U.S. dollar, point of origin of 2000 onward in the bull market. I mean, he's made more money in the gold than in stocks, or depending on what point of origin one looks at.
Of course, and most of us are using this last 5 years as the template for gold. Well, that is a huge mistake. I mean, as you point out, you go back to 2000 when this thing really bottomed. I mean, we are still up 360% from the low, and the stocks are probably, well, they're not that much. They're probably up 300%, but they did get up 1,400% off the low from 2000. So there's lots of opportunity there, and they've done well over time. Some people got in late. Of course, the whole the frenzied top. Too many people obviously got hurt because of the top and gold and silver in 2011. But all of it holds together in my mind. I've never sort of been concerned about telling people to stay the course. And the recent data is very, very encouraging. And as you know, at the margin, just a little change in thinking, because gold is such a small part of the world's portfolio. I think it's less than 1%. Less than 1%. I mean, that is stunning.
And that's counting the paper gold as well, for the most part, too.
Yeah. Yeah.
I mean, what is it?
Paper gold and real gold. So, it doesn't take much shift in sentiment here. And you can see, as I mentioned, 4 or 5 of the major sort of international bank brokers have come out and suggested, well, yeah, maybe you could go into gold here. They're actually quite positive. I think RBC turned positive, HSBC turned positive. There's other ones out there. So it'll bring the people in, and this relative outperformance that we've experienced starting this year is going to bring more people into the trade for sure.
So you've been at this for 40 plus years now, right? In financial markets. What surprised you the most? What are some of the things that you would love to share people as far as the lessons that you've learned and may have been perhaps the most painful, or and everybody's always asking you, what do you think about silver? I'd love to know what you think are the greatest lessons the financial market has ever taught you.
Well, the thing you got to do your own thinking, and you got to go against the crowd. I mean, who would have bought gold in 2000, right? Or gold stocks in 2000? Well, as it turned out, it was exactly what you should be doing, but everybody hated it. And of course, you go back to the middle of last year and everyone hated gold and silver. And I think the biggest thing is do your own work, figure it out, and you almost want the crowd to be against you because they can only join you. If 99.5% don't believe, only 0.5 do. Mm-hmm. If you get some of those 99.5, if you get 0.5% of those 99.5, you just double the interest in something. So that's why it's always good when people are against you. I remember when I used to visit companies, and one of my favorite questions, do any brokers follow you? And I always wanted the answer to be no. I said, perfect.
And thank you very much.
Exactly what I want. I don't want anybody. I mean, if 20 brokers are covering you, I know I'm not stealing anything here, okay? But if no one's covering you, then it's great. And if no one has interest in something, then it's good. And we know I think, hit the bottom of that pendulum in interest in gold and precious metals and the stocks certainly sometime last year, and it's going to swing back in our favor going forward here.
All right. I think we'll wrap up this week's show there. Appreciate your time, Eric. It's always been a pleasure to have you come join us on the show.
Well, Doc, thank you, and Eric, for all your great work there. And there's few of us have to stay out there and spread the news, and you guys have done a great job, so I really appreciate the opportunity speaking with you.
And before we let you go, if you can let listeners know a little bit more about all the services you offer at Sprott Asset Management as well as Sprott Money.
Sure. Well, I mean, we have these various physical trusts. We have gold trust, silver trust, platinum, palladium trust. We have a gold miners ETF. All of these are listed on the New York Stock Exchange. We have a company up in Canada called Sprott Money that deals in gold and silver coins. And those are all available at either Sprott.com or SprottMoney.com. So, and we love the competition, Doc. So you keep up the good work, and all the best to you and your team.
Yeah, the same to you.
Our biggest competitor is not each other, but the thinking that the public has about precious metals. And like we were saying a moment ago, there's so few people in this market, and there really needs to be a lot more, just for the sake of people protecting themselves.
Our day will come.
All right, for the Doc and Eric Dubin and Eric Sprott, thanks for tuning into this week's SD Weekly Metals and Markets.